Alrighty, welcome to today's end of day recap. This is Christian from Roberts Tribeca Trade Group, and a lot to talk about today, which is good. A lot of notable things. So we'll start with today was Fed Day. So coming into the day, they were not really expecting a rate increase for the day. I think it was like 12% chance. Really, the focus was on June, considering there's no press conference today, on if they're going to raise rates in June. So coming into today, the probably using Fed Fund futures, which is what I have up in front of me, there was about a 70% chance at a rate hike. And after the comments from the Fed, what did they say? They said that inflation is close to their 2% target. They talked about the recent weakness in the first quarter in terms of some of the economics that have been coming out recently are transitory. And they sounded like they really want to go ahead and raise interest rates coming in the June meeting. So this jumped up. It was 70% earlier in the day. I threw this out on Twitter. Now it's 90%. So it looks like, so the good news is it's not going to be a shock in June. There's a 90% chance. So the market is already pricing it in. The market's expecting it. It's not going to have a big, when they do raise interest rates, the market will be ready for it, and I don't think we're going to get a big move down there. So that said, the it does look like that's in the cards for the June meeting. So a couple of things to kind of look at today. There's a lot of observations today. Most of today was pretty much a choppy day. The S&P is still above trend here. We are getting, I think, a lot of toppy. In Nasdaq, we had Facebook report. They're moving down a little bit of the after hours, but really what I wanted to focus on is just a couple of things that I've been noticing that's been going on. We'll start with the Baltic Dry Index. The Baltic Dry Index, has been moving up this year. It's decently off the highs now. So this is not the end of the world, but it's no longer moving up. And I'll get to the theme about why I'm going through this in just a second. But iron ore is another one that been watching, and this has also been decently trending down now for the last month or so. And really, it went all the way from, I guess you would call this a double top at this point. Big move down. This is about a 30% move down from over 700 to below 500. I think even more, about a 35% move. Break of the 200-day moving average, retest a couple times, and it looks like it's failing again. So this is not, I would say, the most bullish thing in the world right now to see iron ore going down. You could also look at a couple other metals. You could look at copper. Copper, it almost looks like a head and shoulders. These patterns are not my favorite to really kind of quote, but be aware of this. It looks like a left shoulder, a head, and a right shoulder. Watch this neckline right here. Basically, watch the 200-day moving average. If you break, that'll confirm that that's a head and shoulders pattern. And we're starting to see that, going back to the Baltic Dry and a lot of different shippers. This is one that I was in that I got stopped out of. No problem relaying some of my losers here, but this was a nice uptrend. Left shoulder, head shoulder, right shoulder. Look at the volume maybe on the break here. Same thing with a couple other names. DSX is another name. Really made a nice move up here and is now back breaking down here. So it's kind of going on in a couple different places. You look at the XME ETF. This has now broken the 200-day moving average. If you want to short something, that is something that's available to you to short. You could see the 50-day crossing below the 100 and also getting close to the 200-day moving average. So the reason why I'm looking at some of these commodities and some of these global indicators is because you want to see these things as equities have been trending up and making new highs. You want to see some confirmation. I think you want to see some confirmation in some of those global indicators like the Baltic Dry, iron ore, copper. If these things are breaking down, I don't think it's a great sign for equities in the next couple weeks to come. Which is perfectly fine. We are very close. We just hit all-time highs just a couple days ago. So what I'm trying to say here is be aware of some things that are a little bit overbought. If you go to, you can look at the Qs, just be mindful. We're looking at right now in the Qs, the RSI is super overbought. It got over 80. It's now a 75. But notice the difference between, why I have some of these shorter dated moving averages. It kind of gives me a little bit of training wheels. Kind of tells me, hey, are we a little bit extended? I think adding longs is a place where you want to, where the two moving averages meet, not when there's huge separation between the yellow line and the blue line on my chart is the 20 period, the purple line is the 50. So every time we get a check back in this uptrend is a great place to add risk. Not right now. So I think we talked about a couple things that you could do in the trading room to kind of help a little bit. Either A, I think it's a great time to move to a little bit of cash. Or if you don't want to move to cash, you could buy a little bit of puts. The VIX is still extremely low right now, so puts are cheap. So you could buy a little bit of puts. I mean, we're talking about a 10 right now in the VIX. So really cheap to buy. There's no better time right now to be buying puts. I mean, the VIX is below 11 handle. So that said, if you don't want to buy puts, if you don't want to move to cash, if you've got some longer option plays, maybe sell a little bit of upside of front month calls. That's another great way to collect a little bit of premium if we get, and again, I don't think we are going to get a major pullback, but I think we just need a little bit of a breather. I think we're just a little bit too extended. And I wouldn't be saying so if I saw all those other indicators that we just went over. If they were all trending up, I would say, okay, hey, the market's cooking right now. But just start to see a lot of things that are going the opposite way. Also, I wanted to talk a little bit about the dollar. The dollar I thought this was interesting that the last couple of days it's been right at the 200-day moving average. It looks like it's catching some, you could even see after the close today, after the Fed meeting, it's still going higher here. So up 44 basis points. So you can't even really blame the weakness in the metals on the strong dollar because the dollar is weak. It's at the 200-day moving average. I actually like a long here now that we've separated a little bit from the 200-day moving average. I would like to see us get above this green line tomorrow. That'll be nice, some nice confirmation to take a swing at going long. And then if you look at it in terms of the euro, which has been rising up to the 200-day moving average, it might get rejected here. There was a decent size put buyer in the FXE ETF. This is the Euro ETF going out to next week. So keep in mind, again, why would they just be going out to next week? What do we have this weekend? We have a round two of the election, which, I don't really understand why people were kind of celebrating and opening up French wine, champagne bottles, saying, "Hey, this thing is won." This thing is far from won. There's an election. There's a debate tonight between Macron and Le Pen, and it sounds like he's not such a good debater. So, this thing is far from over, and I think people are not pricing in the risk of what could happen this weekend. There's no, this guy doesn't have a lead. That election, the first round of that election, that's over. He's not taking a lead, and it's not like in baseball or in sports where he's got a 10-game lead and he's far in front. Anything could happen this weekend, so that completely resets. So I think you really want to be aware of that. Somebody bought puts today. There was also, despite how weak gold has been, people have been buying gold like crazy in options, not so much in cash. I'm going to show you two different charts in a second, but basically the last couple days, especially today, we saw two orders in GLD. So I'll show you over here today's activity. A couple different. There was 7,000 of the July 125s, and I'm just looking at aggressive option activity right now. July 125s, July 130s, July 128s, all calls being bought in gold, even though it was down like almost 1.5% today. And this is what we've been seeing all week. If you go yesterday, gold buyer, July, also May, August calls being bought in GLD. So it did break the 200-day moving average. There has been a ton of outflows let's see if I can find this, in GDX, but record outflows. Most outflows I think GDX has ever seen in 1 week's period was all last week. So people really got out of GDX. However, that said, there was a pretty aggressive two orders in GDXJ today, calls. Which GDXJ is the junior gold miners, or the gold miners on steroids, as I like to call them. This one's also had outflows, not quite as big as GDX, but today there was a big call buyer. There was the August 38s. There was also next week's calls that were bought in GDXJ. So two-way flow, outflows and cash. And I think at this point, as many outflows as it's had, maybe it might be a little bit of a contrarian trade to have a little bit of gold miners on over the next couple weeks. Not even though it's as a counter trend trade, it's below the 200-day moving average. Gold is now slipped below the 200-day moving average, but just paying attention to the orders, the option orders, people are speculating that gold may be going higher. So that's a quick run through of just what I see in the markets. And option activity was actually really interesting today. There was a lot of I don't know, different kind of orders. Not the usual type of orders that you normally see. There was a sharp call buyer in X-ray, GIMO that we saw. I took that as a day trade because the chart just looked horrendous. I thought it made for a nice day trade. There's a big order in Gilead, which I can't take that trade. This thing has been such a downtrend. I can't take it, but it still was a very large trade going out to December. Nokia, which we've seen some calls the last couple days. Target, which took off. I know there's a trader that in the Tribeca trade room who's been long Target the last couple days before the option activity, so has really had a nice move in that one. What else? A couple other names, just a lot of unusual names, I would say, saw call buying today. I have been playing around with Twitter the last couple days. So TWTR. Above the 200-day moving average. We played this in options yesterday. Took this off for more than a double the May options. So I switched into cash, and now I'm long versus the 200-day moving average in Twitter. Another name that maybe is off people's radar is Qualcomm. Qualcomm made a nice move. Again, counter trend trade. This news that was out the other day in Qualcomm, they had bad news and the stock went up. So it could be that the low is in for Qualcomm. You could see it's been making a nice move. They announced a couple days ago. Usually when you announce bad news after a big move down and the stock ends up going up, usually the low is in. So pay attention to Qualcomm option flow, but or you could basically go long versus this support. Again, counter trend trade. It's below the 200-day moving average, but maybe it pops up to maybe the 100-day, 50 or 100-day moving average. So there's a couple ideas. So that's it for today's recap. A lot to talk about, a lot of movers. I gave you guys a couple things to think about in terms of either moving a little bit more into cash, which is what I will be doing before the weekend, or at least for your longer dated plays, looking at selling some front month calls. So a couple things to do there, and also again, puts are very cheap right now. So you don't want to buy puts again when you're just like with insurance. You don't want to buy fire insurance when your house is on fire, right? When everything is all calm and fine, that's when you buy insurance. Could be a good time to do that right now. Thanks everybody. Have a great night.